Hello, greetings, and welcome to Dividend Blasters. This is our 36th video. The topic today, 5 leading investments in artificial intelligence, or AI. You know, if you've been watching the news, the national news, the business news especially, and reading what's going on in the world, you cannot help but be touched by what's going on with artificial intelligence. This is going to be the next revolution. And there are a handful of companies that are leading the way. And Wall Street is in a fury. They are looking to fund it as well as get on the bandwagon. And we've seen that. We've seen that with a handful of companies, technology companies, particularly chip making companies, but also uh, software providers, data providers. We've seen price appreciation go up recently. You know, they got a lot of these companies got beat up badly in 2022. They are recovering nicely so far in 2023, especially in the last month. So, what I'm going to do is I'm going to talk about what I see are the 5 leading investments to look at if you want to be part of the artificial intelligence investment wave. And it is here and it's coming and it's going to continue. All right. A quick disclaimer, I am not your financial advisor. So the purpose of this video is financial education. It reflects my own personal opinions, my research, as well as my experience as an investor for more than 30 years. I urge you, do your own research, do your own due diligence, and consult a financial advisor prior to making any major financial investment decisions. So, before I go on, the question we ask is, how did you decide which were the 5? Great question. I mentioned Wall Street. The question I will ask, and I have asked, is where is the big money? Where is the big money going to fund in artificial intelligence? Where when I say big money, I'm not just talking about folks like you and me, and we're great folks, obviously. I'm talking about the money managers, the investment firms, the hedge funds. That's what I'm looking at. And what hedge fund is bigger than BlackRock? So, what you see here is, and I downloaded their 13F submission. And if you recall, the 13F is a quarterly report that institutional investors that manage more than $100 million must submit to the SEC on a quarterly basis. Well, this is their latest submission for 2023 for Q1. And what you see is basically over 50 companies that they invest in. I shaded the companies that I see playing a role in artificial intelligence, excuse me. Uh, I shaded all of them yellow. Okay. And then I went back. I said, okay, I don't want to cover all these. I'm going to cover what I would assess as right now, today, being the most important companies and the role that they're playing to advance artificial intelligence. So obviously, listen, Apple is their largest investment. I shaded them yellow, but I'm not covering them. I'm covering the companies that are shaded in orange. Now, does that mean they couldn't become an orange? No, they can definitely become an orange if they want to, and I think they probably do. I just don't see them there yet. What I see is Microsoft, Amazon, Nvidia, Google, and Advanced Micro Devices. And that's in the bottom panel. The ones that I shaded that I'm not covering, I don't quite see them there yet, but I see them getting there. Apple, as I mentioned, Tesla, Meta Platforms, and some folks are already. Some of my friends are telling me, why didn't you include them in orange? I'm sorry, I don't see them there yet, and maybe I'm wrong, but they're not there. Broadcom, and you know what? I absolutely love Broadcom as a chip maker. I just did a video on them, and I have several shares of them. I see them getting there. I don't see them there yet. Texas Instruments, um, Qualcomm, and Oracle. Those are yellow. So I see them getting there. Okay. So let's go to the next one. All right. These are the five leading investments as I see us to look at in AI. And another thing I did, so, I looked at what BlackRock is investing and I selected from that, but I also did a little additional research and determined uh, how many of these companies, which of these companies have hedge funds investing in them and how many hedge funds they have. And so I'm actually going to share that information with you as we go forward. So right now, basically, it's AMD, it's NVIDIA, it's Amazon, Google, and Microsoft. And what I'm going to do is I'm going in order of number of hedge fund investors as well as market cap. Doesn't mean that one company's better than the other or one company's further ahead than the other because these companies all do different things, but they're all going to play a very important role in AI. All right, so the first one we're covering is Advanced Micro Devices, or AMD. So, AMD operates as a semiconductor company worldwide. They design and they sell semiconductor products. They got four business segments: data center, client, gaming, and embedded segments. And what you're going to see here is that basically AMD and especially NVIDIA have deep background in gaming chips, and that really gives them a great advantage in artificial intelligence. Its CPUs and GPUs are designed to handle artificial intelligence workloads. They were incorporated in 1969, so they've been around a little while. They're based in Santa Clara, California. All right, now what I'm going to do is I'm going to go through some of the high level metrics for AMD, and I'm going to do this for each of the five. There's a lot of slides here, and I'm going to go through them kind of quickly. You can freeze them at your convenience later. They will be there for you. But there's a lot of slides. So AMD closed Friday, May 26th at 127.03. Earnings per share is 288. Now, what you're going to see, which is kind of interesting, and I think this really reflects the spinning up of the price appreciation in the market, is they have a PE ratio, a forward ratio of 4408. That's high. Look at how that compares to the S&P 500. More than double. The S&P 500's PE ratio is 18, and the Dow Jones Industrial ratio is about half of AMD's. It's 22. Market cap is 204, and it's getting bigger. I mean, the more that price goes up, the more that market cap goes up. All right, let's look at ratings. Well, the quant rating, and as you may recall, the quants were just looking at the numbers. They get a neutral rating or a hold rating. They're about 3.5 almost. Uh, they have high growth grades and high profitability and high momentum. They're a little bit below average in valuation, and I'm thinking that that's because they feel that they might be overpriced relative to the earnings. I got it. Um, Now, the next two ratings, one comes from Seeking Alpha contributors, and the last is Wall Street. And I will say that a lot of my information that I get comes from Seeking Alpha. I am a subscriber. It's a wonderful resource. So you're going to see a lot of screenshots that I am leveraging from my subscription to Seeking Alpha. Seeking Alpha contributors, they give it a neutral rating. So there are 19 contributors, and of the 19, two rated as a strong buy, 8 is a buy, 6 is a hold, and 3 is a sell. Wall Street is much more bullish. Okay, Wall Street basically they're giving it a buy rating of 4.19, and there's 42 analysts on Wall Street that are following AMD. And of the 42, 22 rated as a strong buy, 6 is a buy. So this is overwhelmingly a buy, strong buy stock from Wall Street. 14 give it a neutral rating. None of them are rating as a sell or a strong sell. And folks, what you're going to see in all of these is that Wall Street is bullish on all of these stocks. All right, let's press on. No dividends. AMD does not pay a dividend. And as I have mentioned in the past, is that a lot of these tech stocks do not pay dividends. They feel that it is a more effective use of profits to plow them back into the company. This is a very competitive industry. They're looking to drive and implement innovation in their processes and their technology. So that's kind of how that works. All right. So, who are their peers? Well, Seeking Alpha says their peers are Texas Instruments, Qualcomm, Analog Devices, Micron Technology, our friends at Broadcom, and NVIDIA. And what I want you to take away from this slide is the comparing the market cap and the number of employees. What you'll see is that AMD is a decent sized company, over 204 billion market cap, bigger than Texas Instruments, bigger than Qualcomm, three times the size of ADI, bigger than Micron Technologies, three times the size of them, and uh, but smaller than Broadcom. Broadcom is an impressive company, and they've actually been growing the last couple of weeks. AMD, I feel, is a little bit closer to artificial intelligence, however. NVIDIA, I do feel that as far as chip makers go, they're probably in the number one pole position. And look at that market cap; it's it's knocking on the door of $1 trillion. Um, you don't have a lot of companies that have breached the $1 trillion market cap. Right now, you have Apple and you have Microsoft and you have Amazon. Tesla has breached it. They have come down below it, but they have been there. Nvidia is going to get there. I have no doubt. And I think I would not be surprised if they get there pretty soon. Looking at the number of employees, Qualcomm by far has the most. Everybody else, as well as Micron Technologies, but everybody else is in the 20,000 range. AMD is 25,000. NVIDIA is 26,000. Broadcom is 20,000. All right. So looking at total return for the last 10 years, uh, who's delivering the most? Well, right now it's Nvidia. They've delivered over 11,400% over the last 10 years. Who's next? Well, that would be AMD. They're over 3,000%. And then you have Broadcom at about 2,700%. And then everybody else is way, way, way behind. Now, what is total return? Total return is price appreciation and dividends earned. Okay, so dividend paid out plus that price appreciation is your total return. And I will say that NVIDIA does not pay much of a dividend. They really don't. And AMD does not pay a dividend. And you know what? You're not buying these companies for dividend. You're buying them for uh, technological growth to drive price appreciation. That's why you buy these. Uh, okay, let's move on. Purpose of this slide is just to give you some context how AMD stacks up on their latest closing price against its peers. It's cheaper than Texas Instruments, a little bit more than Qualcomm, much cheaper than ADI, more than Micron Technologies. It's about one eighth the price of Broadcom. But I will say this, and I do remember this, that the PE ratio from Broadcom is more favorable than AMD. So that's something to think about. And I'm not here to advocate to go out and buy AMD. My purpose here is to share with you information so it can aid in your research to make a decision. But as far as market position, AMD has a very strong market position relative to other companies, other chip makers, in artificial intelligence. And I would say that by far, NVIDIA, they're in the pole position. Um, their latest closing price is a little under $400, so it's about three and a half that of AMD. Uh, okay, let's move on. This here basically shows you a graduated view of total return and dividends from 1 month to 10 years for AMD against their peers. And again, NVIDIA is got the best 10-year return. I would say that then it's AMD and then it's Broadcom. And you can look at the others, the 1 month, the 3 month, the year to date. Dividends, AMD pays no dividend. They're the only ones that do not pay a dividend. Texas Instruments and Qualcomm and ADI pay dividends. If you want to get into the chip making, market, and that has some connection, or could have some connection to artificial intelligence, you could take a look at Qualcomm, ADI, or Micron Technologies. I would say, um, I've looked at all of those. I like them, but I do like Broadcom, and I have several shares of Broadcom, and they pay a nice dividend. Let me just draw your attention to the forward dividend yield for Broadcom. It's about 2.26%. But that is not what gets me excited. What gets me excited is that 5-year CAGR of a little under 26%. So, anyway, not to talk about Broadcom here. I just wanted to share that with you. It's fairly fresh in my mind since I just covered them and I made a major purchase. All right, let's move on. Valuation. Well, here, you look at the PE ratio, and I would say let's take a look at the PE non-gap trending 12-month ratio for AMD. They're at 42, much higher, really, than almost everybody. Certainly double that of Broadcom, more than double that of Texas Instruments, 4 times Qualcomm, more than 4 times ADI. The only one that's higher is NVIDIA. And, NVIDIA has been on a tear recently. So I'm not surprised. I would say, you want to be careful. These are all great companies. And I'm particularly thinking about AMD and NVIDIA because this is artificial intelligence. But you want to be careful because they're on a run, and there can be a market correction where if the PE ratio is high, folks could go running. So be careful. And I just want to make sure you have that information at your fingertips. All right, growth. Well, let's take a look at growth. I tell you what, I like to look at revenue growth, and I like the 5-year CAGR for revenue, and AMD has averaged 32%, and that's pretty good. And that is actually more than anybody here. Micron Technology has been negative. Broadcom has been about one third. They're at 13%, NVIDIA about 19%. So wanted to bring your attention to that because I think revenue growth is a fairly important metric. I also like to look at net income. Net income 3-year CAGR, well, AMD's is negative. They're almost negative 7%. Texas Instruments and Qualcomm is hugely positive, 19% almost, and almost 38%. ADI is 48%. Micron Technologies is negative. When I see that, I get nervous. I like Broadcom. Look at that, 69%. NVIDIA, 13%. All right, so you've heard that. Let's move on. Profitability. Well, you can look at the gross profit margin. I think that's pretty good. Let's look at the net income margin because that gets down below all the operating expenses. Net income margin for AMD is 1.7%. Texas Instruments 42%, Qualcomm 26%, ADI 28%, Micron Technology a little under 7, Broadcom 37, Nvidia 18.5%. Another thing I like to look at is cash from operations. AMD has about 3 billion in cash from operations. Texas Instruments is more than double. Qualcomm is almost triple, almost 9 billion. ADI is under 5 billion. Micron Technology is almost triple, 19 or 9 billion. Broadcom it's more than 17 billion, and Nvidia 6.8 billion. So one thing I want to mention is that Broadcom's, and this is not a Broadcom briefing, but their cash from operations is just head and shoulders above everyone else. And their market cap is about a quarter of Nvidia's. And it is their cash from operations is almost 6 times that of AMD. So I wanted to just share that with you. And as an extension, look at net income per employee. Look at what it is for AMD, a little under 16,000. When you go to Texas Instruments and Qualcomm, it's over 200,000. Um, Broadcom, 640,000. Nvidia, 100 almost 183,000. So anyway, the numbers don't lie. They can be misleading sometimes, but they don't lie. All right. This slide speaks to risk and specifically price volatility. So look at the betas. AMD has shown some price volatility over the last 60 months, a little bit less over the last 24 months. And recall that the beta is price volatility relative to the S&P 500, which would be 1.0. So the volatility is more than double. And lately, the volatility has been positive. All right. You haven't seen a lot of negative, but it does happen, especially in this industry sector. I'm seeing that Texas Instruments is much more gentle. Qualcomm has volatility, but it's more gentle. ADI, much more gentle. Micron Technologies has volatility, but less. The only one that has a lot more volatility is NVIDIA, and they've been going up. It's been good volatility. So, anyway, let's move on. You can see the income statement measures. I actually touched on this in the previous slide. So I'm going to skip over this. You can go back and look at this and do a comparison. Uh, Balance sheet measures. I haven't really talked about this. I did talk about cash. Uh, they have a decent cash balance, but it's less than Texas Instruments and it's much less than Broadcom and Nvidia. Their debt levels are less than their cash. Well, that's good. The debt level of 2.85 billion, uh, much less than Qualcomm, which has a lot more debt. Broadcom has a lot of debt, almost 40 billion. So that's something to think about if we talk about that. Anyway, I'm going to go to the next one. This here is specific to cash flow. And I already talked about cash from operations, and it's really the same as net operating cash flow. So you can take a look at that. So that's AMD. And I'm going to go to the next one, another chip maker, and that is NVIDIA. So NVIDIA, also a chip maker, provides graphics and computer and networking solutions throughout the United States, Taiwan, China, and across the globe. They are known as a graphics processing unit designer and seller, or GPU, and that really is what gives them an advantage. That's their sweet spot. Their products sit at the heart of ongoing artificial intelligence, and they enable other firms to train and deploy their AI models. Their GPUs rose to prominence earlier this year when it was revealed that they had powered ChatGPT. So, if you've been watching the news, you know that the company OpenAI, which is driving the ChatGPT chatbot solution, is huge. Uh, and it has companies like Microsoft and Google running scared. So they are looking to go ahead and come up with their chat type solutions. And you've heard of, Jarvis, and I can't remember the name of the other one. We'll get to it. But Microsoft and Google have theirs, and they're concerned because basically it kills search engines. So these other companies have to evolve. All right, let's press on with Nvidia. The price has been on a tear. They closed last Friday at 389. Earnings per share is 7.75. That forward PE ratio is high. It's over 50. Look at that market cap. It is almost $1 trillion. But let's go back to the PE ratio of 50. It is almost three times the S&P 500 and more than double the Dow. That is a high PE ratio. The quants basically say that this is a neutral rating. It is hold 3.49. Seeking Alpha gives it a lower rating, but still a hold of 2.9. And you can basically see, let's look at the breakout of the analysts. There's 33 of them for Seeking Alpha. Two are rating it as a strong buy, five is a buy, 14 is a hold, 12 is a sell, none is a strong sell. that tells me that these contributors feel that this is overpriced. And I'm not quite surprised. If you look at the quants, look at those grades. The valuation is F, which that tells me it's overpriced. Everything else is A and A plus. Growth, profitability, momentum, all A's and A pluses. Wall Street, of course, no surprise there. They're bullish on this. 4.45 rating. Of the 48 analysts, 31 are strong buy, 9 are a buy, 7 are a hold, 1 is a sell. Got it. All right, let's press on. So, as I mentioned, NVIDIA does offer a dividend. It's a small dividend. The dividend yield is 0.04%. So, if you have one share, you're going to get 16 cents a share. So, it's not much. It's really nothing to write home about. And you're not buying it for the dividend. The payout ratio is only 5%. You don't see typically a payout ratio, of 5%. If you were to see a payout ratio with a Johnson and Johnson or a Pfizer of 5%, I'd say sell that stock immediately. This is different. Okay, this is a different business model. We're in a different business sector. The 5-year dividend growth rate or the CAGR is an eyelash below 2%. So 0 years dividend growth, no surprise there. All right, let's press on. The growth rate, well, let's see, the 5-year CAGR, 1.99%. And you can see how they stack up against their peers. And, what's bringing this up is Qualcomm and Texas Instruments and Broadcom. They're bringing up the average. So that's the difference. And who are their peers? Aha. Well, really the same ones we talked about. Although Seeking Alpha has decided to add Taiwan Semiconductor here. And they're located in Taiwan. I've talked about them before, but also Broadcom, AMD, which we talked about, Texas Instruments, Qualcomm. You can see how the market cap stacks up. Again, it's almost a trillion. They're really double the size of Taiwan Semiconductor and almost 3 times the size of Broadcom, almost 4 times the size of AMD. Texas Instruments and Qualcomm, they're just much smaller, but they do pay nice dividends. All right, let's move on. Total return. Okay, well, I tell you, as we already talked about, Nvidia's top dog here on total return, and it's really all price return. The dividend plays a very small role. And I think I've talked about this a lot when we just covered AMD, so I'm not going to spend a lot of time on this slide. But you can see that it's basically Nvidia, and then it's AMD and Broadcom, and then the other folks just they're more gentle, okay, as far as price volatility, and then price appreciation and total return, of course. Here are the prices that closed as of last Friday. So Nvidia is an eyelash below 400. Taiwan Semiconductor is about 100, and I've mentioned that Taiwan Semiconductor is a great chip maker. Warren Buffett had a huge investment in them, and he completely divested, and it's really for geopolitical reasons. They are located and headquartered on the island of Taiwan, and there is some risk there that if Taiwan gets invaded, they could be taken over. And Taiwan Semiconductor is a critical player in military and weapon chip making. So, as I've been reading recently, they have been building plants in Arizona, 2 plants. So maybe to mitigate that risk. I don't know if they can fully mitigate it. But anyway, okay. Broadcom, obviously, their closing price is very high. It's over 800. The others are much lower. You can take a look at those, and we talked about these a little bit in detail when we talked about AMD. Total return, this is the graduated look from 1 month to 10 years. And of course, it's NVIDIA really at 10 years. Uh, you know, and you can check out the comparison for 1 month and then 3 months. And they come out really positive on all of these. I think there was one at year to date where maybe one of these, they were not number one. Maybe it was the 5 year. Yep, 5 year, they were trailing Broadcom. Got it. Okay. You can do a comparison of the dividends. So NVIDIA's dividend yield is quite tiny. It's 0.04%. If you want a healthy dividend in the chip making market, take a look at Broadcom uh, or TSM. But I'm telling you, I'd hold off on TSM just to kind of wait and see how things shake out. Texas Instruments and Qualcomm, they pay a nice dividend. They also have nice CAGRs. You can take a look at that. So valuation, let's take a look. I like to look at the PE non-gap trending 12 months. So Nvidia's is over 127. I think that's pretty high. I really think that that's due to this recent run up. I mean, they have been their stock has been on a tear. They even went up 25% in one day. You compare it to the others, they're in the 15s and the 20s. AMD I thought was high at 42. Those seem to be higher because of the recent push to get in on artificial intelligence. And these two chip makers, I think, seem to be in the number one and number two positions. I would say, however, that don't overlook Broadcom. And again, if you like dividends, take a look at Broadcom and the others. All right, let's press on. Profitability, you can look at the gross profit margin. They're all in the 50s, except Broadcom's over 74%. I like to look at net income margin. NVIDIA's is about 18 and a half. Not quite what TSM's is or Broadcom's, which are more than double. But AMD's is a little bit under 2%, and the others are in the 25 and 40% range. Something to think about. I do like to look at net income per employee. I think that's an interesting measure because I like to look at how many staff they have and what's the average net income per staff. And obviously, Broadcom is by far in the pole position there, followed not too far behind by TSM. Nvidia's is pretty good. It's a little under 183,000. I think that is a decent measure, but less than Texas Instruments and Qualcomm. All right. So price performance, obviously, Nvidia is a number one here for 10 years. They're here to stay. They're not going anywhere. They are going to be a market leader, and they are a market leader in chip making for AI. And you can take a closer look at the graduated 1 month through 10 years and just see how they stack up. It's kind of interesting. Risk, well, you know what? Yes, it is risky. There is price volatility in this market, and it's been positive. We know that, but it can get negative, uh, especially with Nvidia and AMD. Their betas are high. As I said, lately it's been positive, but they can go negative too. It's just something you need to be aware of. If you want to be in the chip making game and you want something less volatile, uh, take a look at Broadcom, take a look at Texas Instruments or Qualcomm. If you're looking for a regular dividend payment, take a look at those as well. All right. Income statements. I already talked about the net income and the gross profit. You can just see how they stack up. A little under 4.8 billion for Nvidia. It's much less than Taiwan Semiconductors, about a third of Broadcom. They dwarf AMD. I mean, AMD's net income is not even a billion, but much less than Qualcomm. All right, let's move on. You can look at the balance sheet measures, and typically, what I like to look at the cash, because cash, as you know, is the lifeblood of a company. Uh, their total cash on hand is about 15 billion. Uh, it is more than Qualcomm's. It's more than Texas Instruments. It's more than Broadcom's. Okay, and AMD's. TSM, they're kind of in their own league with cash. And then let's look at debt. Total debt, they're a little under 12 billion. TSM has a lot more debt. Broadcom has a boatload of debt, and the others are smaller, except Qualcomm. All right. Cash flow. Well, we talked about cash on hand, but how's cash flow? Like cash from operations. It's not bad. It's 6.8 billion for Nvidia. Uh, Less than Texas Instruments and Qualcomm, more than Broadcom. I'm sorry, more than AMD, but much less than Broadcom. So something to think about. All right, that is Nvidia. So that's two of the five. Next one, Amazon.com. All right. So Amazon, we all know what Amazon is. It's the online retailer, and you can buy consumer products and you can buy streaming subscriptions through them online. And they actually have physical stores in North America and around the globe. They have three segments in their geography base. There's North America, there's international, and then they have Amazon Web Services. And Amazon Web Services is really what gives them a in around artificial intelligence. What else do they do? They manufacture and they sell electronic devices. The Kindle and Fire tablet and the Ring doorbell thing, and they've acquired other businesses and they've just expanded their influence. They're a huge company. Um, Here the description that I researched is they're a quote silent player in artificial intelligence, and they are kind of silent. But you know what it is, and I've mentioned this. It's the Amazon Web Services. They have these huge data centers. They collect data. They process data. They do cloud computing. They are by far, in a way, number one in cloud computing in the world. And that gives them a leg up in artificial intelligence. Incorporated in 1994, headquartered in Seattle. Okay, so they closed at $120 last Friday. And you take a look at Amazon, you take a look at Apple, you take a look at Google. They got beat up bad in 2022, but they've been coming back this year, especially over the last couple months. Um, so if you take a look at 120, that is a decent price. Although that PE ratio looks kind of high to me, it really does, which gives me pause. Now I did go and I do have Amazon stock because I like the price. Uh, did I overpay? And the hundred and I think I went around 110, 105, 110. Maybe I did, but it just doesn't seem like a huge amount of money. Earnings per share is $1.56. I don't think that is a significant amount. They, of course, do not pay a dividend, nor should they. They are the one of the companies that have a market cap over a trillion. They're at 1.23 trillion. Um, I mentioned early on that I do have some summary metrics on these investments. And one of the metrics is the number of hedge fund investors. They have 243 hedge fund investors that invest in their company. Google has, I believe, over 200, and I believe Microsoft has over, I want to say 289. I can share that more with you later. But you know what? You take a look at. Let's go back to the PE ratio. It is by far more than the S&P 500s of 18, and more than three times that of the Dow's. So uh, it's a big number in my judgment. All right, let's move on. So let's take a look at the ratings. Well, this is interesting. The quant rates them as a strong buy, 4.92. I've never seen a rating that high. Uh, you know, Seeking Alpha, they rate them as a buy. That looks like 3.56. There's 30 contributors, seven strong buy, nine buy. So that's 16 of the 30. That's more than half. Nine hold, four sell, and one strong sell. I think some of those folks that want to sell are troubled by that PE ratio. Wall Street is very bullish, strong buy, 4.5. Okay, well, of the 50, I think that's 50 analysts, if I'm reading it right, 30 strong buy, 16 buy, three hold, one sell. No strong sells. Wall Street's bullish, and they're looking at the price. They're saying $120. That's cheap. Jump in, and that's really what it is. And they're also looking at the Amazon Web Services, cloud computing, as they're in to play a role. All right. As I mentioned, they do not pay a dividend. Who are their peers? Well, Alibaba, PDD Holdings. Alibaba is a Chinese company that does retail online. PDD Holdings, Prosus, Mercado Libre, and JD.com. None of them are on par as far as market cap with Amazon. The closest is Alibaba, and it's about one sixth the size. All right, let's look at total return. Well, okay. Amazon's about 795% for 10 years. And again, there's no dividend, so it's a really price return. There is one, and it is, how do you pronounce that? Mercado Libra. Okay. MELI, ticker symbol. They're over 1,041%. Okay. Let's see. And I'm just going to toggle back here because I don't know enough about them, but they are much, much smaller, obviously, than Amazon. But usually with smaller companies that are smart and innovative, there tends to be a greater upside if they are good. You got to be good and you got to be quick. All right, let's go on. So here's a comparison of the prices. Wow. Well, look at Mercado Libre's price of 12.82. That's huge. I don't think I would buy that. I have shares of Broadcom and I have shares of Berkshire Hathaway Class B shares. And to me, those are expensive. And I got in at Broadcom in the 600s. So 1282, that's a lot of money. Amazon, by comparison, 120, Alibaba 80, PDD 71, Prozi 13. All right, let's move on. So here is just a graduated look from 1 month to 10 years of total return. And, Mercado Libre obviously is leading for 10 years. They're leading for 5 years. They're leading for 3 years. They're leading for 1 year. Year to date, it's damn close between Amazon and Mercado Libre. Amazon's been down for the last 9 months, and that's a lot of that is 2022. They got killed. It gets a little closer when you look at 6 months, and then 3 months, and 1 month. It's Amazon. So anyway, take a look at that. None of these companies pay dividends, and again, you're not going to buy them for dividends. Ah, and I'm sorry, I'm chuckling because I think it's kind of amusing. Valuation. Well, again, let's look at our PE non-gap trending 12 months. I do not have anything for Amazon. Let's see, what else can we look at? We can look at PE. Let's look at PE gap forward ratio. So we'll look at the forward PE ratio for Amazon. They're at 78, by far more than Alibaba, more than PDD. The only one that's close is Mercado Libre at 75. Those are high ratios, but Mercado Libre is a pricey stock. Amazon is not. All right, let's press on. Well, let's look at growth. Let's take a look at revenue. Let's take a look at 5 year revenue compounded. I see Amazon at 22%, Alibaba at 28, PDD 115. So these companies are growing a little bit faster on the 5 year time horizon, as is Proci, as is Mercado Libre. JD's is about the same. Might be interesting. When I see that, and I've said this before, there is no one metric that's going to give you the answer. This takes digging. These are never simple analyses. They're complicated. You got to go through it. You got to take your time and do a little digging. So let's see. When you look at the revenue growth year over year, they do pretty good. They're almost 10%, much more than Alibaba's. PDD's is 51%. Wow. Proceed 29%. Mercado Libre 42%. JD is less. So something to think about. I'm telling you. Let's see. Let's press on. Profitability. We can talk about gross profit margin. I like to look at net income margin, and they have razor thin margins at Amazon, less than 1%, by far the smallest. Alibaba's is 8.4, PDD almost 26, Proceed 73. Wow. Mercado Libre more than 5. Okay. I like to also look at returns, like return on equity and return on assets, or return on total capital. Let's look at return on total capital. Well, they do not bad. They're not bad at 2.7%, but Alibaba's is at 4, PDD is 18.71, Mercado Libre at 11.3, JD at 4.22%. So these other companies, they seem to have better returns. Um, Same with net income per employee. So anyway, that's something else that you can put in your hip pocket and think about. Looking at the risk measures, more volatility for the last 24 months. And a lot of that is 2022 was a rough year for tech stocks. 2023 has been pretty good, especially the last month and a half. Those betas for 24 and 60 months are much more than Alibaba, PDD, Procy. Uh, Mercado Libre is close. Actually, they're even more price volatile. And I'm telling you, with that $1,280 stock price for Mercado Libre, it's probably positive price volatility. Okay, I've talked a little bit about the income. You can take a closer look at this, but gross profit. Let's just take a quick look. It looks pretty high at 234.7 billion, by far. That's not surprising. They are just so much bigger than these other companies, market cap wise. They're much bigger than Alibaba, much bigger than PDD, Procy. They're huge. But if you look at our operating income, they seem to come down. And I'm presuming that is because maybe their operating expenses are fairly high. Their operating income is less than that of Alibaba, but they're more than everybody else. All right. Balance sheet. Well, their cash is not bad. It's more than everyone's. It's 64 billion except Alibaba. Their debt level is way, way, way higher than everybody else's. 179 billion almost. Nobody's even close. Alibaba's about 28 billion. That debt to equity ratio is high. It's over 100%. As is Mercado Libre. Wow, 271%. Okay, press on. So cash flow, we did talk about cash a little bit on hand, but looking at net operating cash flow or cash from operations, they by far have the most from net cash flow, 54 billion. Alibaba's is about half, around 29 billion, and then the rest are way, way, way behind because they're much smaller companies. All right, that is Amazon. Next one, Google. I am excited to be looking at Google. So, Google, known formally as Alphabet, and they have two ticker symbols, GOOG and GOOGL. I just have GOOGL in here. They offer various products and platforms across the US, Europe, Middle East, Africa, Asia Pacific, Canada, and Latin America. Their major business lines are Google Services, Google Cloud, and other bets. I don't know what other bets is, but let's see. They provide some of the key products are they have ad revenue. They have the Android phones that they are behind. Google Chrome, the search engine. They have various hardware accessories. They have Gmail, which a lot of us use. They have Google Drive, where you can store data and files on the cloud. Google Maps, Google Photos, Google Play, Search, and of course, they own YouTube. So, with regards to AI, they have something called Google Bard, and that is their artificial intelligence platform. And they are working very hard to preempt or catch OpenAI. Uh, so, anyway, and I think that they are nervous, as I would be if I were them. Bard is a real time chatbot that uses artificial intelligence, and Google has its own AI division with a host of different projects. So they're committed to this. They're committed to being a player in artificial intelligence. They were founded in 1998. They're headquartered in Mountain View, California. All right. So they closed last Friday at $124. Excuse me. Their earnings per share is about 533. Their PE ratio, a little bit more reasonable. It's 23, which is a little bit more than the S&P 500 and approximately the same, a little bit more than the Dow Jones. Uh, those are 18 and 22. Google is the other company that's over $1 trillion, and they're at 1.59 trillion. So they are a huge company, and they are going to be joined soon, in my judgment, market cap wise, by Nvidia. So here are the quant rating is a strong buy of 4.97. Yeah, that is extremely high. The valuation is considered a little below average. Growth is considered below average, but profit momentum is very high. Seeking Alpha, they give it a buy rating of about 3.76. And of the 26 contributors, 4 are strong buy, 13 are buy, 8 is a hold, 1 is a sell. There are no strong sells. And then Wall Street, of course, shocker there, they're bullish. They rate it as a strong buy, and I see 4.55 of the 49 analysts. 13 are strong, 14 are a buy, 4 are a hold, and there are no sells or strong sells. They do not pay a dividend. All right, so who are their peers? So when you look at Google, they have as a peer, according to our friends at Seeking Alpha, Meta Platforms. Okay, Tencent Holdings, Baidu. Some of these are Chinese companies. Kaishu Technology and Pinterest. And I like to look again. I like to look at the market cap. They're more than Meta right now. Meta, I do believe, had crossed a trillion at one point in 2021 or 2022. They're below at 671 billion. Google's at 1.6 trillion. Tencent Holdings, a little under 391 billion. Baidu, 44 billion. Kaishu Technology, 30 billion. And Pinterest, a little under 17 billion. All right. And it's also interesting to look at the number of employees. Google has by far more employees than anybody, 191,000. Meta is not small, 77,000. Tencent Holdings, 106,000. The rest of them are fairly small by comparison. So then looking at total return, let's see. Google over the last 10 years has a total return. And again, they do not pay a dividend, so it's all price appreciation, 471%. Meta is more than double, 976%. Tencent Holdings is about the same, 472%. And the others are much smaller, and 2 of them are negative. So here are the closing prices as of Friday. Google closed at 124. Meta has really come back at around $262 a share. They really they got beat up bad in 2022. Tencent Holdings is a fraction of that. Baidu is about the same, 126. Uh, the last 2 are much smaller. Okay, let's press on. So here's just the graduated look of total return. And again, it's total return here is the same as price appreciation because there's no dividend. And again, it's Meta Platforms and then Tencent Holdings and Google. And then Tencent Holdings does pay a dividend. All right. The valuation. Well, I like to go to the trending 12-month PE ratio, non-GAAP. And for Google, it's 27, less than Meta's of 32, a little bit more than Tencent Holdings of 22, about double that of Baidu of 16. I'm sorry, 13. And Pinterest is much more of 41. All right. So looking at growth, again, I like to look at revenue. So looking at year over year growth, um, Google's not bad. They're better than Meta for year over year of 5% versus negative. But Meta's been coming back. Remember, 2022 was lame for them. So it's in many cases, it's a matter of losing less than Meta. And I think that's really what this is. Looking at the 5-year revenue growth, it's closer. Okay, if you sometimes you have an off year, and if we've learned anything about markets, you really shouldn't look at one year in isolation, because if you have one crappy year and you have 10 good years, that's pretty good. So 5-year revenue growth, 19% for Google, Meta Platforms, 21%, more than 10 cent. Um, that second one from the right, and I can't remember how you pronounce it. It's 62%, and Pinterest is 42%. So remember, though, those last two are much smaller companies, so there is room for growth. There's a bigger upside. The bigger you get, the harder it is to grow by magnitudes that compete with the smaller companies. So let's see the net income CAGR for 3 years. I like to look at that. They Google is very good, 19%, much more than Meta Platforms, which is less than a percent. Tencent Holdings is 26%. Baidu is 80%. All right, we press on. Profitability. Well, I like to look at net income margin. They have a 20, almost 21% margin. Meta Platforms is 18, Tencent Holdings is 33. The rest are much less. Let's look at cash from operations. Google 89.9 billion. Meta 50 billion. Now those are the biggest companies, but Google's a bigger company, okay? And the rest of these guys are much smaller. Tencent Holdings 25 billion, and then you're getting into single digits and then millions of dollars, much smaller. If you look at net income per employee, it becomes a little bit more even between Google and Meta, but it's still Google, and then Tencent Holdings, and then the last two, which are much smaller, they're actually losing. And then this one here is just price performance. It's the same as total return because there's no dividends, but you can see the difference here. In Meta Platforms for 10 years has outpaced Google, but for 5 years they have not. All right. So risk, their betas are about the same, and the betas have both come up over the last 24 months, from the last 60 months, and really a lot of that is the market downturn in 2022, and then the market uptick that's been happening in 2023. The others tend to be a little bit more gentle as far as betas, except Pinterest for the last 24 months. Theirs is a little bit on the high end. All right, income statement. Well, we did talk a little bit about this. Talked about the net income, and really it's Google over Meta, and then everybody else is much smaller. 10 Cent Holdings, and then everybody else is much smaller. Balance sheet. I already talked about cash a little bit, and I think I mentioned the debt. Let's take a closer look at total debt. Well, total debt is 29 billion for Google, 28 for Meta. Tencent Holdings is much higher, 52 billion. Hey, when I'm looking at these, I'm really looking at Google and I'm looking at Meta Platforms as a potential competitor. Meta, remember, I have them shaded yellow, so they're on my list. They're not on the orange list, but they're on the yellow list. Long-term debt, they're both approximately the same, a little under 12 billion for Google, a little under 10 billion for Meta. All right. And then cash flow. Well, net operating cash flow, cash from operations here, it's the same. And Google's is about 90 billion, Meta's is 50 billion. It's interesting to see their capital expenditures. That's not something that we talked about, but Google has had capital expenditures of almost 28 billion. Meta Platforms, 33 billion. And you can bet your bottom dollar that those investments are around artificial intelligence. All right. That is Google. Last but not least, Microsoft. Microsoft is the largest company on this list. So uh, their market cap, I'm going to get to that, is over $2 trillion, like Apple's. And I kind of have them in the pole position because they actually have more hedge fund investors investing in them, and they got the largest market cap of anybody. But we all know what Microsoft is, the software company. They develop, license, support software, services, devices, and solutions worldwide. They operate in three segments: productivity, business processes, intelligent cloud, and personal computing. Got several different artificial intelligence platform, including Azure AI, which provides services to researchers and data. They were founded in 1975 in Redmond, Washington. And here's that metric I was talking to you about, the 289 hedge fund investors. That's more than anybody uh, that invest their time and focus in artificial intelligence. They closed Friday at 332.89. Earnings per share is 961. Their PE ratio, it's a little high, but it's reasonable, I think, for this sector. A little under 35. They pay a dividend. And I want to say something about Microsoft. They've actually been paying a growing dividend for 18 years. So they're unique. They are a marquee company. They're a growth company. They're a high tech company. And in 7 years, they will be a dividend aristocrat if they keep it going. And I have no doubt that they will. Their market cap is 2.48 trillion. They are huge. And taking a look at their PE ratio, it's 34.65. It is almost double that of the S&P 500. But again, they're a different type of company. It is about 12 more than the Dow Jones Industrial Average. So, the high tech companies, they tend to, I think, especially when they get on a run, their PE ratio is going to go up. People get excited, bid up that price. So, looking at their ratings, their quant ratings is neutral. It's a hold rating of 3.49. And the way I read this, the valuation rating of F basically tells me that the quants see a overvalued or overpriced company. Growth has been rated as a D plus. I don't know if they're taking into account the last 3 or 6 months, but we can talk more about that later. The profitability A plus, momentum A. The Seeking Alpha analysts rated as a buy are 3.77 out of 5. So out of the 23 authors in Seeking Alpha that cover Microsoft, 4 rated as a strong buy, 9 is a buy, 9 is a hold or neutral, and 1 is a sell. Anybody that's basically rating it as a sell is basically of the mindset that they're overpriced, or take your profits and run, or they're not going to be a player in artificial intelligence. I've read this stuff. I don't agree with it. But anyway, Wall Street, of course, is bullish. 4.41, not as high as some of the others, but pretty darn high. Got 51 analysts. 30 is a strong buy, 14 is a buy, 6 is a hold, 0 is a sell, 1 is a strong sell. Okay, that's interesting. Somebody from Wall Street. Okay. So here's just a dividend summary, and we haven't really seen these on the others, but the yield is modest. It's 0.82%. So if you have a share, you're going to get $2.72. The 5-year CAGR is 10%. And I've talked about a threshold or a hurdle rate of what we like to get as a dividend investor. I like to see a 10% total between dividend yield and the dividend growth rate. Well, we're getting that. We are going to get 10.84%. I like the payout ratio. It's a safe dividend. The dividend growth, as I mentioned, has been 18 consecutive years. So they're growing the dividend. And this is different because it's not something that we could talk about very much on the other 4. Very little with NVIDIA, but that's it. Microsoft is different. All right. Dividend growth grade. Again, here's something a little different. They get an A plus because look at that 5-year CAGR. They got a B, 10.02%. And that's my favorite. And I like to look at the 5-year CAGR. I like to look at the 10-year CAGR. They get a B plus, 11.57%. And you can see that they compare favorably to the median of their sector. And I'm going to show you who we judge as being their peers. That's what the sector median comes from, the peers. Um, I like the 1 year CAGR, 7.11%. They get an A minus. So, but they're really getting that A plus because of that 18-year consecutive growth in the dividend. All right. Here's their profile. Here are their peers. And, let me actually stop for a second and say this. I am a shareholder of Microsoft. I think this is a phenomenal company. I think that maybe a company like this comes along every 100 years. And as far as peers go, this is what Seeking Alpha calls their peers, but I just don't see them having a really true peer because they are leaders on so many fronts. They're going to be a leader in artificial intelligence. They are a leader in gaming. They are a leader in cloud computing. Are they number one in all of those? No, but they're like number two and number three in a lot of these. And then, of course, in their desktop software, which has migrated to the cloud, and they get subscription revenue for use of that is absolutely genius. Uh, that's their sweet spot. And they just keep mushrooming into other areas. So their peers are Oracle, ServiceNow, Palo Alto Networks. I've heard good things about them. VMware, I've heard good things about them. And I do believe that Broadcom is looking to acquire them and has been working on that. And Fortinet. Take a look at the market cap. Nobody's really close. The closest one is Oracle, which may be 1/10 of that size. Microsoft has almost a $2.5 trillion market cap. Oracle's is about 281 billion. And then it goes down with ServiceNow 109 billion, and then everybody else is much, much less. All right. Total return for 10 years. Actually, I'm looking at max here. I didn't look at 10 years. I went beyond it because I wanted to show Microsoft because they've been paying a dividend for more than 18 years. That's why I went max on this one. Microsoft is a total return of over 18,000%. So they're head and shoulders above everyone else. Next one is Fortinet of 3,900%. Then you have ServiceNow of almost 2,000. And I'm sorry, I skipped over Oracle. Oracle's number two. Oracle's 11,500%. So it's Microsoft 18,000, Oracle 11,500, then Fortinet 3,900%, then ServiceNow 1,900%, then Palo Alto Networks 1,900%. All right. So here's the closing price as of last Friday. Microsoft's closed at 332, as I mentioned. Oracle's about a third of that, 104. ServiceNow is pretty pricey, 537. Palo Alto Networks 211. VMware 133. Fortinet 67. All right, I talked about total return. That top panel just shows a comparison from 1 month to 10 years. It's a graduated look. And for 10 years, you know what? It's interesting. Fortinet for 10 years has a higher total return of 1,750% than Microsoft. So we were looking at max before. So Microsoft has gotten a lot of their returns prior to those last 10 years, whereas Fortinet has been more recent. So that's just something to kind of think about and tuck away. ServiceNow, 1,300%. Palo Alto Networks, 1,100%. Looking at dividends, Oracle's dividend is not bad. Their forward dividend rate is double that of, of Microsoft's. And the CAGR for 5 years is 12.3%. That would be a pretty decent dividend investment. So it's something to think about. None of the others pay dividends. All right. Valuation. So let's look at the trending 12-month PE ratio non-GAAP. Microsoft's is about 35, more than Oracle's. So, Oracle may be something to look at. And even if, there might be a little bit behind Microsoft, probably way behind in the artificial intelligence world, they look to be, by my assessment, from what I've seen, a good company. They're obviously a good company. They've been around a long time, but a good dividend investment. ServiceNow, that is a high PE ratio of 65. Palo Alto Networks 57. That's pretty high. VMware is not bad, 20. Fortinet 50. All right. Growth year over year. Well, Microsoft has a little under 8%. Oracle's is almost 15%. ServiceNow is almost 22%. Palo Alto Networks, almost 26%. Fortinet, 32%. And again, they're smaller companies, so they have a little bit more room for an upside growth opportunities that maybe is harder for a larger company, even one as innovative and as uh, you know amazing as Microsoft. Let's take a look at the 5-year revenue CAGR figure. They clearly are bigger than Oracle, 14% versus 4%. But ServiceNow, a much smaller company, almost 30. Palo Alto Networks 25. VMware is less, 10. Fortinet 25. So, you do a little digging and you got to make an assessment because, as I mentioned, these are not simple analyses. You're basically pulling together a lot of metrics and you have to generate what I would call a thoughtful, integrated decision. And if you're going to go forward with one of these or more than one of these, so profitability, I have talked about net income before here on a previous slide. But let me make this point here that net income per employee is really high comparatively. So for Microsoft, it's over 312,000. It's because their net income is huge, irrespective of how big their workforce is. It's more than 6 times that of Oracle's, which is around 59,000 net income per employee. And then the rest are just much, much less. Fortinet has 73,000. That's maybe worth mentioning. I do like to look at the returns on equity and assets. Uh, the return on equity of 39%, return on assets of 19%, return on capital of almost 21%. They compare favorably to Oracle. Then these other companies are much smaller. You will probably see much higher returns on equity as you do for VMware and for Fortinet. All right, let's move on. So performance, and this is just price performance. Well, interestingly, for the last 10 years, Microsoft, 4 times that of Oracle, but less than the smaller companies. Because again, these smaller companies are good companies and there's just greater room to grow because they're much smaller. So maybe what we do is we look at the shorter time horizon. Look at 1 month, look at 3 months, look at 6 months. They being Microsoft, tends to lead the pack. Uh, so that's what I talk about when I'm talking about going deeper. You can't just look at one metric. Sometimes you got to read between the lines, and then let's look at risk. Well, for 60 month, the beta is less than 1.0. I think that's fascinating. Oracle, it's 1.0. ServiceNow 1.04. These are basically approximating the S&P 500. The last 24 months, they've all come up a little. For the 24-month beta, it's come up to 1.18 for Microsoft. It went up about 5% for Oracle. ServiceNow has come up a lot. Their 24-month beta is 1.7. And, based on the previous metrics for them and for Fortnite, it's going to be positive price volatility. They've all come up. They've all come up because of positive price volatility the last few months. There was negative price volatility in 2022, and now there's a lot of positive price volatility. Income statement, I've talked about this quite a bit, so I'm not going to go too deep in this, but you can just do a comparison of the net income. Microsoft's is about eight times the size of Oracle's, and then everyone else's is much, much smaller. And then looking at the balance sheet, they have they got over $104 billion in cash on hand, which is huge. absolutely huge. The total debt of 79 billion is a big figure, but look at Oracle. They're a much smaller company. They got more debt. So, that's something to think about. That is something to think about and keep in mind. I was talking about Oracle. It's a good, probably would be a good investment. I want to know more about that debt level. Cash flow. So they have a net operating cash flow of 83 billion, which is huge. Okay, much more than Oracle's, much more than anybody's. Cash is king. It is the lifeblood of a company. All right. So, I went through this, but I didn't really talk about, as far as key takeaways, and this is just one key takeaway, but it kind of goes back to where the money is. Where's the big money? And I covered the five companies that BlackRock uh, has big stakes in that focus on artificial intelligence. And I looked at their list, and they're all, it's not the top five, but they're in the top 50. And maybe three of them are in the top 10. I'd have to go back. And then there's a couple of them that are further down that have focus on artificial intelligence, and I covered them. But another measure that I talked about a little bit, but not a lot, is that these companies have several hedge fund investors that invest in their companies. And Microsoft by far has 289 hedge funds investing in their company. Number one. Amazon is number two of the five. They're 243. Google is number three at 204. NVIDIA has 132 hedge fund investors. And Advanced Micro Devices, or AMD, 91. So that was another vantage point to share with you on where the money is going. I think that's an important metric. Now, guess what? Did I get all the companies? Am I covering all the companies that are going to play a role in artificial intelligence? No. But I covered what I believe are the most important companies today. Is that going to stay the same? I don't think so. I don't think so. I have added seven more companies that I feel are approaching these top five and will approach these top five if they do the right things. Apple, Tesla, Meta Platforms, Broadcom. We just did a briefing on Broadcom. Texas Instruments, we talked about that along with Broadcom. Qualcomm, we talked about that today as well. And Oracle, we talked a lot about that when we talked about Microsoft. I see these seven companies playing a role in artificial intelligence. And folks, that's everything. That's everything I have. And I thank you for staying with me. And I know this is a long briefing, but I wanted to cover this in as much detail and not to go deeper than I had to, but to be comprehensive. But I thank you for being with me the last 1 hour and 18 minutes. I've never done a video this long. And I probably will again, but I thought that this was important to do that. So I thank you for your time. And I ask you to kindly give us a like and subscribe to this channel and share it with a friend or a family member if you think they might find this interesting or useful. Until our next video, have a great day and God bless.